A single client with an extremely high profile that carries equally high expectations. That's the challenge for the endowment fund that provides a dedicated and permanent source of financing for 1/3 of Harvard University's annual budget. I'm Andrew Wilson and I'm in Davos to talk climate action, ESG opportunities and net zero ambitions with Harvard Management Company. Okay, Mike, thanks very much indeed for joining us. First of all, give me some background on Harvard Management Company. What's its genesis? How was it formed? And what's your relationship with the university?
So Harvard Management Company was formed in 1974. At the time, the assets in the endowment were starting to grow, so they made the decision to try to professionalize the investment management. We're a wholly owned subsidiary of Harvard University, which means all of our effort and our mission is to deliver risk-adjusted return for Harvard. Right now, about 1/3 of the university's annual operating budget comes from the endowment. That equates to about $2 billion a year that goes towards financial aid, research, and professorships.
Making that work strikes me as being quite a lot of pressure on you and your colleagues, but sustainable investment has always been, as I understand it, a backbone of that.
Yeah, it's really been in the process from the beginning. Even before Harvard Management Company was formed, Harvard University was focused on being a responsible investor. So they'd set up 2 committees to oversee the investment and voting of proxy matters on environmental and social issues. So it was really the E and S of ESG before we had the term for that. More recently, we've been focusing on ESG and sustainable investing in our own investment process. So we see this as a lens to really identify important financially material factors that influence the long-term performance of our portfolio. So it's not something that is just a niche product, it's something that we believe all thoughtful investors should be doing.
And that's a trend we see a lot in a lot of investment communities around the world and the United States, of course, as time goes on. But net zero, your ambitions on net zero are a defining part now of your organization's policy, aren't they?
Yes, they are. So in 2020, Harvard University committed to manage the endowment to net zero by 2050. What that means in practical terms is each year we're going to have to measure the amount of emissions that are financed by our investment portfolio. That's not an easy challenge. As you might imagine, we have a big and diverse portfolio, but we see that as the right approach that's taking a really holistic approach to the climate change problem. And it's also consistent with the university's own commitments that it's made on campus by going fossil fuel free in its own operations, as well as the research and scholarship initiatives that they're operating. So we are excited about the opportunity. It's not going to be easy, but we'll make sure that we meet the university's goals.
Because any organization, whether it's an investment fund or whether it's simply a corporation, looking at net zero soon starts to realize that that's a complicated task to take on. Things you assumed would be clean end up not being so, and plans are revised over and over again. I mean, how are you getting on with that? What are the hurdles that you're finding at the moment?
Yeah, so after we made the commitment, we had a moment where we looked at each other and asked, how are we going to do that? One of the things that we realized is we really have a unique challenge. So we were the first university to commit to a net zero goal. The way we manage our investments in the portfolio is a bit different than many of the other asset owners that have made similar commitments, where they're invested primarily in stocks and bonds. We invest predominantly in alternative asset classes like private equity and hedge funds, and we also invest almost exclusively through third-party external managers. That presents 2 unique challenges for us. The first one is because these alternative asset classes are by definition alternative, it's taken a little bit longer to develop the types of methodologies and ways of assessing progress towards net zero than the more traditional listed equity and corporate bond portfolios. So we've been working with a number of international organizations like the UNPRI and SBAI to develop standards and frameworks for measuring the impact of these portfolios. We've also had conversations with our peers and our external managers to again, create these types of frameworks. The other challenge that we face is because we're almost entirely managed by third parties, that we don't have access to the underlying security information that's necessary to do a carbon footprint for a portfolio. So again, we're working with our managers directly and also third-party data providers to get access to the data we need to develop a coherent model for our own financed emissions.
But presumably year on year, that ESG investment space, whatever you want to call it, is becoming busier, I guess, as the direction of travel gradually shifts across the sector in that direction.
Yeah, that's right. It's been quite an evolution. So 15 years ago, if you were to ask somebody about ESG, it was really seen as a fringe movement. There were a few boutiques that had been developing practices in that area, but it hadn't yet gone to the mainstream. As recently as 5 years ago, when I was having conversations with managers, it was still a relatively common occurrence that they would tell us, look, that's great for others, but we don't really do ESG. Now, I don't think that would fly anymore. It's become a part of the mainstream investment conversation. Every manager has to have its own story and approach to ESG investing.
Why do you think that's happened?
So it's a combination of external and internal pressure. I think there's been so much focus on issues like climate change and social justice that it's really brought attention to the impact that the investment community can have. But also it's come from within as well. So there are the leading people at all of the investment firms that care about these issues just as deeply, and they want to see their dollars not just put to the best use, but also deliver the best returns. And there's an increasing awareness that in order to do that, you have to take these non-traditional financial factors into account.
Now that we're at the point where there is a real momentum behind that kind of thinking, that would classify 2021, 2022 as quite a significant turning point in the way people view the empowerment of their own personal capital.
Yeah, I would say just in the last 2 years, we've seen a tremendous uptick in commitments to net zero. It was only in 2019 that the PRI helped launch the asset owner net zero initiative, and it was followed by a asset manager initiative the next year. So it's really been in the last 3 years that we've seen the type of momentum behind this that we think is going to be necessary to get the economy to net zero by 2050.
So when do you think you're going to know that you've cracked it? When are you going to know that you're safe over the finishing line with all these partnerships and the difficulties with data analysis and all the rest of it?
So I'm not sure we'll know until we get there. One of the key components of this is it's not just something that we can do. It's not even something that just the investment community can do on our own. We're going to need the input and the cooperation from everybody. That's corporates and governments alike. So we've tried to put pressure on corporations to generate more progress towards net zero. We joined the Climate Action 100 Plus in 2019, which is an initiative that engages directly with the 100 largest polluting companies in the world. But we're going to need more than that. So the governments across the world are going to have to step up and meet their commitments under the Paris Agreement. We do think that there is a unique role to play for our particular style of investing in terms of funding the types of innovation and technological improvements that can really go a long way to helping move the ball on some of these. So we've redoubled our efforts in this area just in the last 2 years. We've been reaching out with both our historical partners in the space to do more on climate change and invest in climate solutions. We've also found new partners that we think are leading investors in the space that are investing in the types of transformative technologies that are really going to be leading the way towards the future.
So on a personal level for you, Mike, when you go into work every day, do you feel perhaps just the headwinds are starting to slacken off a little? Do you feel the conversation in the room is getting livelier?
I wouldn't say headwinds. I would say we have a tremendous tailwinds behind us. So this is an effort that has got the attention of people all over the globe that care about these issues and more are starting to see the opportunities in this space. So when I say we're investing in climate solutions, this is not part of some grants program or philanthropy. We think that these are the same types of investment opportunities that are going to deliver the outsized long-term returns that we need to fund the university's mission.
Mike, thanks very much indeed.
Oh, thank you.